Hey, fellow credit renovators, welcome back. Today, we're going to talk about disputes. And I'm talking about dispute because a lot of people, everybody knows when you start talking about credit repair, people talk about disputing. And what exactly does that mean? How do you go about doing it so that you can get those negative items off your credit report? And to do that, you got to understand basis, dispute basis. In other words, what is the reason for disputing it? So let's talk about that. So obviously, in order to get the best credit that you can have, we want to get rid of all of the negative items. So typically, as part of the process of getting rid of those items, we want to dispute things that don't belong there for whatever reason is necessary. And that dispute basis is depending on what the issue is in the first place. So obviously, we know we want to have good credit. So we want to get rid of negative items. Number two, understanding that the right that we all as consumers have the right to dispute anything on our credit that we say is either inaccurate or it's too old, but we have rights. We have rights to dispute anything that we don't recognize, we question, as long as we have a basis for it. We have a reason, this basis, reason. But reason is, I feel like, for me, reason just means you have an issue, but when you have basis, you have an issue that can be supported with documentation or some other circumstance to why you're saying this negative item should not be on my credit report. I should not owe this. It should not show up on my credit report. So as part of the credit restoration, of course, I've said in the past, we got to clean up the negative stuff first because that's our foundation for we're going to build new credit on that. And so part of that process is removing all the negative items on there through whatever means is appropriate. So let's talk about the types of negative information on the credit report because basis has a lot to do with the types. I mean, obviously, we know we got late payments, we have charge off, we got collections, we have bankruptcies, foreclosures, repossessions, and hard inquiries. Now, me personally, I don't think of hard inquiries as negative. Hard inquiries is just that. I mean, it's just basically telling creditors that you have recently applied for credit. Now, hard inquiries, even though they ding your credit a little bit, I don't think of them as negative in and of themselves because that's sort of the cost of doing business. If in order to get credit, you have to make the inquiry. They have to make the inquiry before they decide to extend credit. And when you apply for credit, you have to think of that inquiry as a fee or a bill to pay in terms of credit, in terms of points. So that I don't think of them now. Obviously, it's a negative impact to your credit in terms of a hit to your score, but that's temporary and it's small. What really makes inquiries negative is when you do too many at one time in a short amount of time. It raises all sorts of red flags about what your intentions are with all this new credit that you're trying to get. So that's why I talked about being selective and being careful when you're applying for too much credit at one time. So, but for the sake of this discussion, we're going to leave hard inquiries in as a negative information type on there. So, with that being said, with all these different negative information types, what are the common dispute basis or bases, which is the plural of basis, for these negative items? And again, the basis is different based on the type item and then, of course, your personal circumstance by which these things report. So the first one is inaccurate information. So obviously, we want to make sure as part of that inspection, that credit inspection that I talked about, we're reviewing the credit. part of that inspection is we're looking at all of the account details. And what we're looking for is to make sure we're looking at names, balances, and dates and other information on there. All that information should be correct, because remember, the first order of business, as far as the Fair Credit Reporting Act is concerned, is the number one basis by which the whole credit reporting industry is built on, is that first and foremost, all of our information on our credit reports must be, by law, 100% true and accurate. And so if it's not 100% true and accurate, that is one basis by which we can have negative items on our credit report either corrected or removed, or the account removed as a whole. Now, of course, that's going to vary with the situation. It's going to depend a lot on the creditor, but that is our right, and that is a basis by which we dispute, because things have to be accurate, and if they're not accurate, they shouldn't be there. So sometimes the negative information is what's inaccurate. I've very rarely have I ever seen anybody have inaccurate information that led to a positive on their credit, except for back in the day where I've seen people where negative items, it wasn't so much that they had a positive that wasn't theirs, but it was, more of a negative item that should have been reported on them was being reported on someone else. But inaccuracy is one of the biggest. But generally speaking, inaccuracies don't usually result in a lot of accounts being removed in their entirety, but you definitely get negative information updated. If it's updated, it's still negative information that's removed. And so therefore your file is better for it and your scores are higher for it. Number two, the total, the mother of all inaccuracies, which is what I just mentioned, an account that doesn't even belong to you. So obviously it can't be true and 100% true and accurate if it's not even yours to begin with. Again, going back to that inspection process of reviewing the credit report. I mean, if you see something that is not yours, you don't recognize it. That's first where we get things validated and verified to make sure, because it could be just a matter of something you forgot. It could be, so you need a little memory jog, or oftentimes what's reporting on credit is a third-party collection agency that bought the account or was assigned the account by the original creditor, and you might not see the original creditor. Depending on what credit report you're looking at, that information might not be there. But once you do a validation verification and they show you when and where that account was originally with, you might go, oh yeah, I did have an account with such and such or so and so. But if it's not yours and it's wrong, that's a basis for dispute and having it removed. Of course, that talking about the third-party collection agencies, sometimes it's a duplicate. So you got the original account. So say you had a credit card with Fingerhut. You had an account with them. You never paid, because I've heard stories about people having Fingerhut and they never even bought anything. With Fingerhut, the creditor extended credit to them. Before they could even spend a dime, they were already charged a fee, an assessment of some sort, and they owe money right out the gate before they even buy anything. And then they go, oh, I don't like this. And so then they walk away, and then Fingerhut sells it to CBE Group or somebody, and then you're getting letters from them and you ignore them because you have never heard of CBE Group, understandably so. And so then what ends up happening is you ignore CBE long enough, they report on credit, and then Fingerhut is still reporting the original account. So now you got the same account being reported twice on your credit report, which again is a violation. So one of those got to go. And so that's another item that can be disputed in the effort to remove negative items and clean up your credit. Because negative items could be the entire account, or it could just be different data points on any of those accounts that read negatively. Things, payment statuses like collection, charge off, those things like I talked about, mentioned earlier. And so, I mean, basically, when you got incomplete information as well, can be, information incomplete is almost like the same thing as wrong, because if it's missing important pieces or in the lines on your credit report, if those items are missing, they need to be in there, because sometimes missing data is positive stuff. And if you're getting dinged for all these negative items on each account, negative data points as we call them, and then you're missing positive points that are not offsetting the negative, obviously that doesn't benefit you. But especially, specifically missing information would be payment history, because that's huge. Because payment history missing, if it's good, you're definitely losing a lot of points, especially offsets, because payment history is the largest part of our credit score. I mean, when you're talking about FICO 8 or Vantage 3.0, which is FICO 8 equivalent, FICO 8, 35% of your score comes from your pay history. With Vantage, it's 40% of your score so payment history, we don't want that to be, error, in error or missing or anything like that. So that's a biggie. And then when you got errors in the current status of the account, or lack of details about the status of account, things um, like say you got a collection, you paid it off, they update the balance to zero, and that's the only thing they update. And so now you have this account that's paid off. It's a zero balance, but it still says collection charge off. It may read account was paid after collection, things like that. All those pieces are still negative, hitting against you. And the only thing they turn from negative to positive is zero. So part of the dispute process with those, that's why it's important, if you end up ultimately paying off a collection because it's been validated and verified, you couldn't dispute it away, and then you end up paying it to satisfy it. You have to follow up. You either get a deletion letter from them in advance of paying them, and if you can, that's always the best way. So that way, if they don't update the account in its entirety the way you want them to benefit from the score increase, you at least have that letter that you could take to the credit bureaus, whichever bureaus that collection is being reported to, because sometimes it's not always on all three. And you could say, hey, look, I got a letter here that says upon receipt of payment, we're fine with this getting removed. And then you show them your receipt of payment, you give them those. And the credit bureau says, well, creditor said they were okay as long as they got their money. Says here they got their money. And then that way you can get it removed directly from the bureau, instead of having to keep going back to the creditor after they've gotten the money and no longer interested in talking to you, and say, hey, please update, please update, please update. That's why you guys out there that know me know that I always talk about deletion letters. When if nothing else, you have to end up paying off a collection. And again, we do that at the end. A lot of people out there, they don't like me to say that, especially people that are who comment on my page, who are in the credit repair space, and they always trying to sell people on promising them to remove everything, thinking that's the only way that people will pay them, is by promising to save them money on their collections. And that's not what I do, because the reality is we may have to pay some things, but we do that only at absolutely necessary, after we've determined that that you would actually owe. It's really your account. That's one. Number two, we know exactly what you really owe, not the made up numbers that they come up with, but what you really, really owe through verification. And then we know that we're paying the right people. And if it's a third party collection agency, they don't get a dime until they prove that they have the legal right to collect on this debt. And so that's where all that comes in. But that's at the end. We first work to remove as much as we can without paying any money, because it shouldn't be there in the first place. We're not going to pay off a collection that don't belong to us. We're not going to pay off a collection that to the wrong party. If we owe company A and then company B says, give me the money, we're not going to give the money to company B unless company B can prove that they got a right to collect this money on behalf of company A, or they bought the debt from company A and can legally do that. And we're not going to pay it if it's not old, if it's old and shouldn't be on the credit in the first place. So we make sure we do all of those things before we start talking about maybe having to pay something off. So keep that in mind. So that's a last resort, but it is one that's because once we've determined that you really do owe the money, that should be the proper mindset. Is that okay? You got to pay what you owe. A lot of people, they hear me say you got to pay what you owe, Pookie. And the idea is it doesn't make sense. I mean, we go back and forth when we know, because if we got a basis, then we're not going to pay if we have a basis for not paying. But a lot of people out there try to sell people on trying to get them out to pay something without having a real basis for not owing on the debt. You can't just say, we're not going to pay it because we don't want to. That's how we got to where we are now. So I think it's important to make that distinction. So speaking of outdated information, even if it was a legitimate debt of yours, but it's been years since, and I've talked about this before, and I think I kind of confused some people a little bit because um, there's sort of this gray area where people talk about where when it comes to debt and the debt clock, the date of last activity is where the creditor keeps trying to move the needle to try to keep the report on. I mean, keep the debt on your credit report to keep messing up your credit to try to get you to pay them, but the date of last activity can't offset if the original creditor, if it's been 7 years since you last paid the original creditor. So there's a basis there if it's expired in that way. But it's not based on 7 years from when you had the account. It's based on 7 years from when you first went into default with them. So when you went into default, they charged the collection and then they charged it off and then they sold it. If that's been more than 7 years, then you may have a basis for removing that without you paying it, because if it's too old and it's expired, don't matter who they sold it to, they can't report it on your credit. They can still try to get the money from you, but they can't report it on your credit. See, that's the distinction. The 7 years doesn't make the debt go away, but it just makes, I mean, it doesn't make the debt extinguished in the eyes of the law, but they can't report it on your credit anymore. The only thing they can do is try to get you in small claims court or something. But that's the distinction. So it can expire from your credit report, but it may not expire. The date of last activity may keep it fresh long enough for them to try to keep reporting it. But once we show that the original debt has expired, credit bureaus are going to take it off. But we have to show that. We got to get that proof. We got to get that validation. And so we can show the credit bureau that, hey, this thing is old. Don't matter what the date of last activity says. This thing is old and should not be on the credit report. And then that's how we attack those expired accounts. So that's the distinction between it expiring from your credit report and expiring as a legitimate debt that can be collected on. But the Consumer Finance Protection Bureau makes it very hard. Once you bring it to their attention, they make it very hard for collection agencies to be able to go after people legally. And again, the only variation there is the state thing, because some states have laws that support collection agencies, especially the states like Nevada and Arizona, places like that, where it's big industry there. A lot of collection agencies, most people don't know, a lot of collection agencies are based in like Nevada and Wyoming and places like that, because they have laws that favor those industries, and they give the collection agencies more protections at the state level than consumer protections. So you always have to contend with that as well. And then of course, bankruptcy is 10 years. So the bankruptcy reporting in and of itself is not that big of a deal. The impact of the bankruptcy account itself only impacts your score for a limited amount of time. And now, obviously, from a manual underwriting standpoint, when an underwriter like me, we see bankruptcy, then we need to see the petition, and then we need to see the discharge and all of that. Because really what happens is if you're filing a Chapter 7, the damage to your credit report, if it hasn't already been damaged, like you got two scenarios. So you struggle with delinquent payments, you got behind, you struggle with delinquent payments, you already gone 30, 60, 90 days late, default, collections, charge off, and then you finally say, I can't do nothing else. All of these items that went delinquent, you file Chapter 7, you include them in bankruptcy protection, you receive an approval, and all of those debts get wiped away. You no longer owe them. However, even in bankruptcy, so you got that. So there's nothing really left for them to report. All the damage is done because you were delinquent before you even filed bankruptcy. So the only thing that gets added is these debts were included in bankruptcy, but the pay history, you just got to let that age out. Now, scenario number 2, you weren't really that far behind, but you know it's a major job loss. You already know. You may even say you're being proactive and go ahead and file bankruptcy, Chapter 7, to get rid of everything under the basis of your job loss and no money to pay these things. So your credit might not be that bad when you file bankruptcy, but guess what happens? The moment you file bankruptcy, they tell you to stop paying your bills. So even if you weren't that far behind before you filed bankruptcy, once you file that Chapter 7, they're going to report, because you're going to stop paying because you're looking for bankruptcy protection. So you stop paying. So then, of course, in the 3-4 months that it takes to go through the bankruptcy court with a Chapter 7, you go 30, 60, 90 days collection, charge off. And by the time you come out the other side of a Chapter 7, you got all this negative information. So that's where your credit score really plummets. But it was because of the bankruptcy, but not because of the entry bankruptcy in the public records section of your credit report. It was because of the action that you took while in bankruptcy, which is to stop paying. And then so your credit score gets trashed that way. And then you come out the other side. You're no longer obligated for the debt. You don't owe the money anymore. That's great. But of course, that does nothing to help your credit. And then you got to rebuild from there, which can be done. Lots of folks have done it. But it's just that you went from like here to it, and then you dug a hole, and then now you got to the bottom of the hole. Now you don't have to worry about the debt anymore. Now you just got to climb back out the hole and then get up there. Nothing wrong with that, but just as long as you guys understand that there's a financial aspect and then there's a credit aspect. When I say finance, I'm talking about money and debt, actual debt. So bankruptcy is 10 years, but the negative information, that the negative accounts that got included in bankruptcy, they don't hang around for 10 years. The information there is still subject to the same 7-year expiration. And of course, as time goes by, the damage to your credit subsides because that new information becomes old. And as long as you start to rebuild your credit and do other things, it's fine. It's just a longer road back. And I just try to tell people, consider, doing something different. But of course, everybody has their own individual. Me personally, I think if you're going to I think bankruptcy is better than debt dispute, where they're going to argue all your debts and negotiate it away. Because most of those companies have the strategy of go into absolute collection, charge off, don't pay anything, let your credit get as bad as let the account get as delinquent as it can be, so then that the attorneys at the debt dispute companies can go in and say, hey, look, this guy ain't paying, and if you work with us, you probably won't get nothing, but if you work with, he hired us to negotiate on his behalf. If you want to get some of your money back, we'll start negotiating. And then, so of course, that's a scorched earth policy. And I believe that debt disputing is worse on your credit than actual bankruptcy, after actual Chapter 7. Chapter 13 is not so bad because you're doing a debt repayment plan. But, and so typically when you do a Chapter 13, Your creditors, they don't report negative information. They just stop reporting altogether. So when you file bankruptcy, they stop reporting. They stop reporting. And the only thing they don't talk to you. They don't call you. They talk to whoever your bankruptcy trustee is, and they've worked out the arrangements with them, and so they accept the payments that they agreed to in the the petition, and so they stop reporting. So at least you're not getting anything negative going on while you're doing Chapter 13. You definitely get um, more love, if you will, when you do a 13 versus a 7. Because from their eyes, it's like you're asking to walk away from your obligations. They're not giving you any good graces for doing that. But people do it, and no judgment from me, but this is just how the industry look at it. You do a 13, they say, okay, we commend you. 13 is tough, but we commend you for trying to repay your debt. Versus 7, they say, hey, you're walking away. So when I was talking about verify, Chapter 13 and them not stop reporting, that means there's nothing to verify above and beyond bankruptcy. But when it comes to verifying information, it goes beyond just anything in bankruptcy. Again, going back to what I was talking about before, doing that validation and verification on any debt that you question. Now, don't question things just for the sake of saying, because there are people out there that advise folks when they're in the process of credit repair, that when they say, hey, we're just going to dispute everything. You're just going to say you don't remember. You don't remember anything. You don't know nothing. This ain't yours, or something like that. It's not yours. You don't remember. So wink, wink, nudge, nudge. And so then they just dispute everything without any basis. And then, of course, credit bureaus usually come back saying it's verified. Now, of course, that's a whole nother story. You got to look at my last video talking about the poor investigation process that the credit bureaus are under attack from the Consumer Finance Protection Bureau. Experian is first on the chopping block, but they're going to hold their feet to the fire for those. But that point is that anything you question, anything you ask for investigation on, you want validation and verification of the debt, because you either see errors on the credit report, or for a fact there are errors, or for a fact it's not yours. So you say, hey, y'all got to prove this. So right now, I'm just asking for validation and verification, but I do plan on disputing it. I do plan on disputing this, because if y'all come back and say this information that I say is correct, fraudulent, whatever, and you come back and say, no, we think it's legitimate, now we got to start the process of disputing that. Because like I had a prospect I spoke to earlier this week, where there's an item on her credit report. It was from a credit card. The account was opened, and she was still a minor. And she said, I didn't have a credit card. I was only 17. It wasn't even my 18th birthday yet when this account started. So obviously she wasn't even old enough to open up this credit card. So obviously we're disputing that based on that alone. She couldn't have opened this account. She was a juvenile, and that's a minor, number one. And number two, when we get that validated and verified, somebody had to sign a contract, and the signature, unless they're a master forger and they forge her signature, that's probably not going to look the same. If they had to collect ID information, it can't be her. So either they don't have it because somebody did this account without getting all the proper documentation, and they just let it through. Because, of course, we know a lot of times when people are committing fraud, they always have co-conspirators, or they were fooled, and there's going to be a driver's license out there with a picture that doesn't match my client. So obviously, information that can't be verified, that's another rule of the Fair Credit Reporting Act. If they can't verify the information, it's got to be removed until the creditor can come back with verification, and then they can try to have it put back on there if they have it and if it holds water. But of course, we know in that process, we got to give them 30 days, because the law says when we ask for validation and verification, they got 30 days to do an investigation and then come back to us. And if they can't, that's the reason why the credit bureaus are under attack right now. They're being that because we know they're getting tens and hundreds of thousands, maybe even millions, I don't know, of pieces every day where people are asking for investigations on incorrect information, and they can't possibly do all these investigations in 30 days. That's why they do these quick surface level BS investigations. That's the only way they can keep up. But and then they should be taking it off, and then the creditors should be able to come back if they got the right information. But see, that's the whole reason why they're in trouble right now, because they can't possibly do the investigations they're being asked to do, that the government says they have to do. Any of us say we want an investigation about the information on our report, their choices are investigate and verify. And then if they can't investigate and verify, then they got to take it off and then take it up with the creditor. And the creditor say, hey, wait a minute, here's the proof. And here we go. So unverifiable information, that is a huge dispute basis. Okay. And then there's what we call procedural errors, based on the laws that I told you about. Remember, like the 30-day rule. So if the procedure is we ask for validation verification, we don't get notification, or they report, like a third-party collection agency reports a collection account on our credit report that they bought from somebody else, but they did it before they notified us that they even have it now. They can't do that. The law says that a third-party collection agency, if they buy or are assigned your account before they can report it themselves as the creditor on your credit report, they have to notify you first that they have your account and that they intend to collect on that account. Now, they usually do it through snail mail. That's why they still send out stuff in the mail, because they use the fact that they mailed it and the fact that they have a U.S. postal, it's been stamped, that says that it's been postmarked, is the word I'm looking for. That's postmarked, that says we sent this out. And that's why they always still send stuff by snail mail. In the last few years, they now accept email, because email has a date and time stamp that's held up in court. So they'll send it by email as well. And that they send it to your active email account and can show that your account did in fact receive this email, and you still have and there's, the account's still active, they assume it's still yours. And that to them, they can say, yep, here's our proof that we sent him or her an email about notification. Now, if they don't have your email address and they don't have your physical address, it makes it harder for them to do that. And again, that usually happens with the older accounts anyway, that are usually expired, because if you've moved since 10 years ago or 12 years ago, they probably don't have your address. They'll try to track it down. And if they don't have, and if you still have the same email address and they get it to you that way, that serves as their proof of notification. And then the other procedural thing that they do is, you say with a creditor, you send that validation verification request in writing, so you got proof through the same proof through postmark, and they can't say they got it. That's why a lot of times they have a different address for different things, some of the bigger companies. And so sometimes you'll send something out and then it comes back non-deliverable, because the mailing address you got is corporate. It's not where they receive their mail, and they keep that one very secret. So it's hard for them to receive disputes and validation requests. I'm talking about the creditors, not the credit bureaus. But if you show that they have a process in place that does not meet the Fair Credit Reporting Act and rules regarding responses to requests, and you run into, if it seems like they're doing something shady, you can always do what I do, is when it comes down to that, is filing a report with the Consumer Finance Protection Bureau saying that this creditor is abusing, they're violating the law, they're non-compliant, and then they do an investigation. And so they could find themselves being fined and or having to pay you damages, because if they're reporting something negative, you could say, hey, this is impacting my ability to buy a house. It cost me money because I had to wait longer to get this credit stuff straightened out. And then now I had to pay an extra $10,000 on my house that I could have done 6 months ago or a year ago, because the area I live in, prices go up so fast. All this negative stuff on my credit report that shouldn't have been there costs me money. And so you can get damages that way in certain situations. So I was trying to keep this one sweet. I'm at 35 minutes, and I was trying to keep it short and sweet, I should say. And so I was going to split this up and then talk about steps to dispute negative items. But I'm going to talk about it anyway. You guys can always watch this video in pieces. That's the beauty of YouTube. So I'm going to talk quickly about some of the steps, the moves to dispute your credit. I've said these before, like I talk about in my credit home renovation analogy. That first step is that inspection. So that's reviewing that credit report. And remember, folks, it doesn't matter where you're getting your report from in terms, because remember, we're not focusing about scores. This is information we're reviewing. So the important thing is, I recommend you go to annualcreditreport.com. Even if you're using any other credit monitoring, it's always a good idea to go to annualcreditreport.com and get your 3 credit score reports from the 3 bureaus directly. When you go to annualcreditreport.com, you got to go through the identity verification for TransUnion separately, then Experian separately, then Equifax. I don't know if it's necessarily in that order, but you got to do that. And this is where you're getting your report right from the well. It's coming right from them. There's no mistakes, no credit monitoring, company buffers or anything, filters. This is coming right from them. And it's got your full credit history. Everything is there. And you want to make sure that you go over everything, because if it's wrong there, it's going to be wrong everywhere else. If it's incorrect there, it's going to be incorrect everywhere else. If it's missing there, it's going to be missing everywhere else. So you get my point. So that's a good play. And it's free. You can get one once a year. Every 12 months, you can get a free copy. That's a good one to go by. Now, if you don't want to do that, you use your credit monitoring. The important thing is, no matter who you're using, whether it's them other folk or whether it's these folks over here, that you're getting all 3 bureaus. Because I know the one company people like to use because it's free. It's not free. They don't charge you a monthly fee, but of course they're bombarding you with commercials because they are now part of a bigger company that's selling all kinds of credit and finance products, which is fine. And I know with them, typically that free service, you're getting TransUnion and Equifax, and then a lot of folks are buying Experian separately, directly from Experian. But no matter what, the first thing, remember, you need to be looking at all 3 scores, because I've said it 100 times, not all creditors report to all 3 bureaus. Some of them report to all 3. Some of them report certain accounts only to 2 of the 3. Some of them may only report to 1 bureau. So oftentimes people are looking at their TransUnion and Equifax, they see what's there, and then they don't realize that they got other negative items on Experian. So you say, what difference does that make? Well, number one, with different creditors, as you're applying for stuff, different lenders may use one of the individual bureaus for their credit decision. You got creditors out there, I'm talking about the big banks. Some of them prefer TransUnion. Some of them prefer Experian. Some of them prefer Equifax. A lot of them have relationships with them, so they pick which one they like to use. Oftentimes, they pick the one that resides in the geographic location of the consumer. So if you live in the Midwest, like where I am, TransUnion is the home bureau, so to speak, because they are located in the Midwest in Detroit. Experian is located in the Southwest. They used to be in Texas. I think they're in California now. and then Equifax, they're in Atlanta. So, but I think the headquarters for Experian is in California, but all their processing and stuff is still in Texas. Because when I send letters, they're still going to their processing facilities in Texas. So, oftentimes that's how it goes when it comes to what the creditors use. Now, in the case of mortgage lending, they're going to look at all three because they do what we call a tri-merge. They look at all three of your scores, and if you got one, they look at it in terms of value, number value, which one is the middle value of the three bureaus, no matter which one it is, whichever one has the middle value number, that's what they use as your qualifying score. And they're going to look at all three. So if you got issues on anything that's on any of the three bureaus, they're going to look at it. As an underwriter, I look at all of them. And so we look at all three bureaus anyway. But so if you've gone through the trouble, you're working to clean up your credit, but you only been looking at TransUnion and Equifax, and then they come along and say, hey, we got an issue. You say, an issue with what? They say, hey, we see this repossession. And you say, I don't have no repossession on my credit. It's on your Experian. And you say, wait a minute, what? My Experian? Why y'all looking at that one? And they say, well, we look at all of them. In the mortgage space, we look at all of them. So it's important that you clean up all three of your credit bureaus, just like you want to make sure all four of your tires on your car are in good shape. You don't want to say, oh, I'm good. 3 out of 4 of my tires are in good shape. That one that looked like a donut, I ain't worried about that one because it probably ain't going to matter anyway. But so you see my point. And so you want to inspect that, make sure everything is good. You want to be looking for the inaccuracies or the things that don't make sense or the things that are not yours. You want to be looking at those things because, like I said before, those are going to be the basis for your disputes, the reasons. It's wrong, it's owed, it's not mine. Those things, basically. And so if you say this is wrong, this balance is wrong, this information is wrong, all of that, you got paperwork at home that shows what it's supposed to be, you want to include that in your letter. You don't want to just, like these people, they tell people go out and dispute it. If you got and then they say dispute it first, and then if they come back and ask for documentation, then do that. I say if you got it already, let's go ahead and do it the first time, because remember, every time we send something back and forth, it's 30 days. So why send it without it if you got it? Right? So that's my process. That's what I do for my clients. I dispute and I ask for documentation. If they say they don't have it, I said, okay, I'll go ahead and dispute without it. But in the meantime, you might want to set about going to get it, because if they come back and say, nope, we investigated, and then you say, we got to go back and say, no, here we go. So if we say we got it the first time, they can't come back and say we investigated and that is true, because we've already shown that it's true. We got paperwork. So that's why I always say do that. It's a much smoother process, especially if you're doing your own credit. You don't want to spend a lot of time. If you're working on your own credit yourself and you're trying to dispute these things, I'm just giving you the tools and the process to give you the best results in the fastest time possible. So that's what I always recommend. You want to gather up that support and documentation. If they say you had lates and you say I was never late, you pull up that pay history directly from the portal of that creditor and say, where's the late payment at? That's how you do that. If you say this couldn't possibly be mine, this place is in California. I live in Florida and I've never been to California in my life. I've never applied for anything in California. And they said that this account was created in person, not online, anything like that. Or this couldn't be my account. I was still in junior high school. So it can't be mine. It's got to be fraud. Or, I have no need for this, that type of thing. I would never buy anything like that. So all of those, that when you say this is why this can't be mine, then it's easy. Then you find the appropriate paperwork that supports that, that type of thing. And then if it's identity theft, then of course we want to go down the road of reporting it to the police, reporting it to the FTC, reporting it to your state's attorney general. All of those things, when you do that, that puts the credit bureaus on notice that they're taking your claim that this is not yours and your claim of fraud seriously, because their position is nobody's going to risk filing a false police report to get out of paying the debt. It's easy to say, oh, that ain't mine, it must be identity theft. But when you go to the authorities and report it as such, they say, okay, we believe you. And then they take everything off, and then they put the burden back on the creditor and say, hey, consumer says this is identity theft. They filed a police report. They submitted it. As far as we're concerned, they telling the truth until y'all can prove otherwise. And so that's a big one when it comes to big piece of documentation when you're trying to, as a basis for dispute, and you're trying to dispute identity theft or fraud. Those are real easy. If it really was identity theft and fraud, report it to the authorities. And then if you got any documentation that makes sense for that, but at that point, you don't really need anything else, because the burden falls solely back on the creditor. Because if it really was identity theft, again, like I talked about earlier, they're not going to have the ID. They're not going to have a matching signature because they already know it's fraudulent. So it's either going to be a bogus ID, or an insider was in on it and pushed everything through without the due diligence that's necessary. But either way, for you, that's a win, because they're gonna take all that off, and you don't have to worry about it anymore. So, how do you file a dispute? Typically, you file a dispute with the bureaus first about any accounts. You say, hey, Mr. TransUnion, Mr. Equifax, Mrs. Experian. I don't know why I want her to be a woman. You say, hey, this stuff don't make sense. This is wrong. This is wrong. All those dispute bases we talked about. You need to check with Mr. Creditor about this information, because we saying it's wrong. Here's my paperwork that says this is why it's wrong. And then they go to Mr. Creditor and they go, hey, client has paperwork that says this ain't right. We need you to validate and verify this information. And if they can't validate and verify it, they say, oh, you took too long, you didn't send it, we go back. We take it off. And then if you figure it out, then you can come back to us later, and then we'll look at what you got, and then we'll put it back if you can prove that it belongs on their credit report. But until they do, and that's how things get disputed and removed without you paying anything. And then if it's a third party collection agency, we go to them, we say, I need validation verification of the original debt. You got a contract, because I don't know you. I never borrowed any money from you. So if you say you bought it from this original creditor, they should have sent you a copy of the contract that I'm legally bound to. And then number two, you're going to have to show me where I was late, where I went into default, where I went into collections. So you show me that I did that. And then number three, you show me a piece of paper that says by law, I got to pay you. I never did have business with you, but you got to show me, you got to prove by law that I'm obligated to you by way of this person or this entity over there. And if they can't provide that, you come back, you don't hear anything, you go back to the three bureau sisters or brothers or whatever, and then you say, hey, I asked them about this account. I asked them for their copy of the contract. I asked them for the proof that I went into default, and I asked them for their legal ability to collect on this debt. They could not provide any of that for me. Y'all please take this off my credit report, because they are in violation. And if the credit bureaus don't take it off, they're in violation with them. Usually the credit bureaus will take it off. Now, of course, we know of late, they've been accused openly of not doing a proper investigation. But I got a feeling with the government looking at this, investigations are going to start to look a little bit more like real ones now. So that's how that would go. And then if they can't provide that, then you have to go back and forth, because that's the thing. That's what makes credit repair so vigorous, so tough, is because back and forth. So lots of people, they always ask me, oh, why is it taking so long? Why, they say, oh, you trying to stretch it out another month. I said, it ain't me, it's them. I can only work within their timetables. The key is for me is I try to do things in an efficient way so we don't have to go back and forth. We may just have to go back forth once, and then we're getting the answers and the outcomes we want the first time, rather than trying to hurry up and send them something just for them to kick it back, and then try to hurry up and respond and kick back. So take your time, let's get the right paperwork, then send it in. Because it might take an extra week to get the right paperwork to send it in, but we save 3 because if we rush and send it in, they're just going to bounce it back, and then we got to wait 30 days for them to tell us no. Then we got to go get the right stuff and then go back. So you actually gain time by slowing down and being efficient instead of trying to be fast. You be efficient, and then if you do an efficient process, you'll get speed that way. And so that's how that goes. Now, of course, the question I always get is, what does these letters look like? What do they look like? What does a good dispute letter sound like? Sorry, I'm bobbing back and forth, but I'm just thinking. So what does it look like? Now, I have letters that I use standard for different situations. I got a whole library of them. A lot of these you could probably Google them, a chat GPT, and maybe find some samples. There are people on the internet selling samples, selling dispute letter packages. I don't sell any currently. Maybe I will, but if you're going to buy anything, is you got to worry about is avoid anybody that's claiming that they got the magic format that's going to guarantee your dispute gets approved. There's no such thing. I mean, I've seen everything from, I don't know, some of you guys probably seen this, where they say, oh, if you hand write the note because the system recognizes differently than if you typed it. That from what I understand, and I've gone through some webinars with people who used to work at the 3 bureaus, and they say, I mean, it's all electronic now. It's called OCR, and then they got Oscar, which is just basically optical. It's an optical reader that can read. It's a computer that can actually read, type, and written word. It can read documentation, and that's how they work to handle the volume. But there, as far as I know, there is no magic to some of those things. I've heard people talk about, oh, Metro 2 is some magical template. I did some research on that, found out that there's not the Metro 2 thing is nothing new. Metro 2 is the program that Oscar uses to read dispute letters. And so you want to do that. The biggest thing with disputing is don't try to, if you got more than 3 or 4 items, don't try to dispute them all at one time in 1 month, because they typically like to call that frivolous. They say, oh, you're just naming everything, which is exactly what a lot of credit repair people out there, they try to, some of them only dispute one thing a month. The other ones, they try to dispute everything at once because they're trying to they're trying to just throw spaghetti at the wall. And it's largely based on how they charge. The ones who charge a tiny, low monthly fee, they're going to try to stretch it out by only doing 1 dispute a month in the name of not over disputing for frivolous purposes. But I think everything in the industry I know, it says that 2 to 3 is recommended, no more than 5. So I typically do, if a client has more than 5, if they got 6, then I usually do 3 and 3. If they got 7, 8, 9, 10, then I try to do 5 at a time. And every now and then, 5 in a month. So I do 5 this month, then next month, as soon as the new month ends, I do 5 more if they got a lot to get through that. Because again, there's no point in trying to rush it by doing them all at once just for them to kick it back and say it's frivolous. And a lot of times, once they label you as frivolous, they label your complaints as frivolous. They won't even look at anything. So if you go back later and say, okay, I'm only going to send 2, they're going to bounce it right back, because they say, oh, this now you the frivolous person. Now you're trying to piecemeal it. So you don't want to get caught in the frivolous mud hole. So it's just better to do 3, 4 at a time, and take your time and do it that way, because it all works out um, in terms of that. So you want to find a good dispute template out there. I can't really vouch. I tried to take some time and look at some of the ones I've seen people on Etsy, and some of those selling a PDF suite of email templates. Um, the system I use has email templates. I have those, but they're not designed to share. They only generate a letter type of thing. But it's important. But I mean, even if you don't want to use a template, you just tell your story, because I don't think it's any magic. There's no magical words in the letter that makes it more or less compelling to the credit bureaus, as long as it's the truth. Okay, because you got one for dispute, you got a dispute letter template, you got validation letter templates, and then you got goodwill adjustment templates. What are goodwill adjustments? Like, say for instance, you've had a perfect record, and then for some reason you had a 30-day late on an account that you had for 2 or 3 years, like an auto loan, and something crazy happened and you had a 30-day late. Typically, as a goodwill gesture, we'll reach out to the creditor and say, hey, we've already had a good history. I had this unforeseen situation. I was in the hospital, whatever, and that's why my car didn't get paid. By the time I got out the hospital and realized that, oh man, can you guys remove this 130-day late as a customer courtesy, because I'm trying to buy a house and that's this 30-day late. And if it's a company that's customer oriented, or they really value your business, they'll take off the 30-day late as a customer courtesy. Now, if you had them before, or you got two 30-day lates, they may, if you've never had any and you got two 30-day lates, they may waive one, but not the second one. They may waive the first one, but not the second one, because they say you should have caught on by then, something to that effect. So, but that is a different type of letter that you want to have. But you can do some research. You can Google out there and probably find a decent letter. And then, of course, you use your judgment. You read the letter and see if does the words make sense. And again, it's a template, so you can always add in your own words, in terms of having that dispute basis and describing why you want them to take action. Now, later on, when you start getting into some of the procedural stuff where you got these legal reasons for disputing, it's a violation of statute 1681G, things of that nature. Those are the more advanced disputes. And you got that. Or say you've gone back and forth with a creditor or the credit bureau, usually the creditor, about an account. They won't remove it, they won't change it, they won't update it. You've given them information, everything, they insist on it. Then that's when you can file that complaint with the Consumer Finance Protection Bureau. It doesn't cost anything to file. You go on their website, you send them the same letters and the same documentation that you sent to the creditor and or the bureaus, and you say, hey, this is everything I did on this account. They won't remove it, they won't change it, they won't update it, whatever it is you're looking for, and then let them investigate it. In other words, you got to sick the bulldog on them, and then they go to them, and believe me, nobody ignores them. Not the credit bureaus, not the creditors. Nobody ignores it, because the Consumer Finance Protection Bureau is the arm of the government that enforces, I should say, everything that's in the Fair Credit Reporting Act. All of these laws are enforced by these people. And so that's their weapon of choice. And they got the full support of the government, of the United States Congress behind them in terms of enforceability, and the Federal Trade Commission in their right pocket. So they can get things corrected when all else fails, and they might even get a few dollars for you. Okay, now and then if you can't get anything that way, then you may consider, hiring a credit lawyer, attorney that specializes in credit issues. And a lot of times they work on contingency, so they'll work for you, and then they'll try to, not only will they seek to correct whatever you're trying to correct, but then they'll seek monetary damages, of which they get a cut. And so most of them work on contingency. Um, and then there's always hiring someone like me credit repair people, because we can handle a lot of that stuff and have the time and the energy and the skill to work through a lot of that. We're not attorneys. Most of us, I mean, there are some companies out there that have attorneys as part of their company. Matter of fact, the word law is in their name in a lot of them. And so they have the attorney right there with the credit repair specialist. So there may be some advantage to that, but I would definitely say that's something you want to look at and determine. I went over an hour, but last thing I want to say, you want to maintain a positive credit report. Obviously, you want to monitor your credit, and then because a lot of times you can catch these things earlier, it's a lot easier to fix them than let them drag your score down. So you always want to do that. So, but at the end of the day, I provide this information because I want you guys to be empowered to if you want to tackle it yourself, having the knowledge and the direction to do that. If you're thinking about hiring someone, you got the knowledge to know when you're talking to them about your credit issues and they tell you what they can and can't do, what they will and won't do. I want you guys to have the knowledge to know you're talking to somebody that knows what they're doing, and they're not a flim flam artist, or if they at least know what they're talking about. So then maintaining that checklist and having that is the key to to really disputing those collections. I can't talk. And having a basis for doing that. So hopefully you found this uh, helpful. Hopefully you found not too confusing. I didn't intend to do this all in one video, so I apologize for you that thought the hour video is too long. But hey, you can digest it in pieces. You can take notes or whatever. So I didn't do it in two pieces. I decided to do it in one. And if you haven't already subscribed, if you've seen this video, I would ask that you subscribe to my channel. No cost, of course. Enjoy the other videos. Hopefully you'll find value in those and find help with those, with your issues that you're tackling yourself, or at least helping you have the information to make the decision if you're thinking about hiring somebody to help with your credit. Of course, you can always call me, but whether you call me or anybody else, I want you to have the knowledge and tools to be able to make an informed decision so that you hire somebody that will be effective and get you where you want to go. Or if you want to tackle it yourself, you got some tools in your toolbox to do it yourself. So until next time, remember, better credit leads to a better life. Better credit means a better life. So trust the process, believe in yourself, believe in the process, and trust yourself for those of you that are doing it yourself. So you guys take care, God bless, and see you in the next video. Bye.